expert. Let's bring her now. For more on the latest market moves and how you should be positioned, we want to welcome in Kate Moore. She is the head of thematic strategy at BlackRock Global Allocation Fund. Kate, great to see you on set.
Yeah, great to be here.
So let's start right there, because last week, Jay Powell delivers the supersized cut, right? Surprised a lot of people, including me. And now it does feel like, Julie used that word drift. Kind of drifting. It feels like, okay, investors asking, what is next? What is the next catalyst? How do you see it?
Yeah, I think there was a lot of excitement going into the Fed meeting. We were all waiting, 25.50, and now it's like, okay, we're in a bit of a holding pattern. We make new highs, perhaps, but it's uninspired highs, I would say, something like yesterday. So in my mind, there are probably three things that the equity market is looking for. First and foremost is earnings. This is a really important story in the third quarter, not because the actual earnings growth is going to move the market, but because there was a big disconnect in the second quarter, as you remember, between revenue growth and the bottom line. Companies were having to, pull a lot of levers and do a lot of things to deliver on the bottom line. And I think there's some skepticism, like, can they continue to do that quarter after quarter? Or is revenue growth going to stabilize? And there's a lot of expectation for the fourth quarter, so we're watching guidance very, very closely. Do companies reaffirm what they have, or do they take down things into year end? So I think earnings is huge. The second thing, of course, is payrolls, end of next week. The labor market has been holding up pretty well, but the determination about where we go from a policy perspective will really come from whether or not there's a deterioration in the labor market. So I think labor market's super important. And then third, of course, is this kind of back and forth on policy, what I'm calling like macropolitical. It's not just the geopolitics, but also the discussion in the US ahead of policy changes in 2025.
Yeah, there was just a CFO survey that the Fed put out today where they said something like 30% of companies are waiting to spend until after the election.
Totally.
So I imagine you're getting a lot of questions from clients about that as well. Like, do I not do anything investment-wise until after the election?
I think it's happening on all sides. So it is very typical in a presidential election year in particular for companies to hold off on CapEx in the back half of the year. They front load all the necessary stuff and they wait and see. But then by the end of the fourth quarter, especially if you do have a presidential candidate, or an elected official, and then you know what Congress is going to look like, they'll start talking about their next year's plans. I'm not sure that's going to happen this year. I suspect we're going to have an even longer delay before we reignite the discussion around CapEx, because there's going to be a lot of uncertainty even into the beginning of the new administration. But investors are doing the same thing. They're kind of sitting on their hands a little bit. Like, there's not a huge amount of momentum around any specific trade. The AI and tech side has slowed a little bit. People still like it, recognize its strong earnings growth and strong free cash flow generation.
But stocks keep making records.
They do, but it's not, I guess I said, not super inspired. It's on not particularly high volumes. And I think the real game changer would be if we got confidence that the labor market was going to stay very strong. And the Fed said, don't worry, we're going to continue to trim because we feel confident on the inflation side. We had some clarity on the policy side. And everyone could kind of breathe a sigh of relief and say the uncertainty factors are out and actually corporate fundamentals are good. I believe they're good, but I'd say the belief is a little bit mixed given these multiples.
You talk about the Fed and clarity, Kate. I'm just interested, when Jay Powell was speaking, did you find that clear when he would say, the economy's actually okay, I'm going to do a supersized cut? Did you find it clear, confusing?
I loved in real time seeing all my Bloomberg feed of all my friends and traders I work with on the street kind of say, this is hawkish, this is dovish, this is hawkish, this is dovish. It was probably evenly split at the end. No, I don't know that it was incredibly clear. I think the one thing that is clear is that data dependency is still really important, and that the Fed is going to do its absolute best to be apolitical and focused on the data. And that's what we should expect. Look, we're in the camp of 25 basis point cuts for the next 3 meetings, another 75 by the end of January. And then we kind of think the Fed needs to wait a moment and really assess what is the impact at that point of a cumulative 125 basis points cut on the economy, on corporate earnings, before they make decisions about what they'll do for the rest of 2025. I tell you, the one thing that I was laughing a lot about last week is many times we dismiss or discount the dots, like, oh, these get changed all the time, forecasts are a moving target. And last week, everyone was obsessed with what the dots were as if it was an oracle. I think we need to recognize forecast change. Our forecast change, certainly mine do.